Kitco News coverage of FreedomFest is brought to you by Coin Payments, crypto payments made easy.
With the S&P 500 down about 20% year to date and the Nasdaq tanking around 30%, the situation for equities is very grim. But according to my next guest, it's going to get a lot uglier. I am thrilled to welcome back to Kitco News legendary investor Jim Rogers. Jim is a best-selling author, the co-founder of the Quantum Fund, chairman of Rogers Holdings, amongst many other credentials. Very good to have you back with us, Jim.
I am delighted to be here, Michelle. It's been too long.
It's been too long since we've hung out in person, but we did have an opportunity to chat in March of this year, and you were
I know.
spot on about a lot of things that you called. But yeah, we haven't been in the same room face to face since about circa 2011, so it's a real treat, Jim.
Michelle, I make a lot of mistakes, so I'm glad I heard something right, but I know I've made many mistakes.
Well, it's good to see you, but you are the bearer of bad news, saying that the situation for U.S. equities is about to get a lot worse. How much worse?
Well, what I have said is we're going to have more bear markets. We've always had bear markets. Now, in Washington, they say, no, we're not. Everything is okay now. No more bear market. If you believe them, don't listen to me. But I know more bear markets are coming. And what I have said is the next one is going to be the worst in my lifetime. Maybe we're in the minute now. I don't know. You should watch Kitco News to find out. 2008, we had a problem of too much debt. Michelle, since 2008, the debt, oh my God, look out the window. The debt is skyrocketing everywhere. So the next bear market has to be horrible.
Well, assuming we're in one right now, and we know that the S&P 500 is already down 20%, so sure looks like we are. The ones that you have referred to as being the worst in your lifetime, the S&P fell by at least 50%. So by that calculation, we still have at least another 30% to go down here.
But before this bear market is over, of course, many stocks are going to go down 70, 80, 90%. That's the way bear markets work. No, of course that's going to happen. I just don't know when it is. Watch Kitco News. They will tell you.
Well, that's why we have you on Kitco News. So it's going to be worse because we have even more debt in the system.
First of all, it's been 13 years since we've had big problems. And that's the longest in American history. Could go for 30 years. Who knows? But it's already overdue on a historic basis. And it's very, very expensive. And it always goes down a lot. When it goes down, we have very high valuations. We have staggering debt. We have a lot of new investors coming in. Michelle, it's not my first rodeo. I've seen this movie. I know how it works. They're all going to lose a lot of money. I hope I'm not one of them.
Well, Jim, I'm not sure Washington disputes that we're in a bear market. Hard to dispute that when the S&P 500 is down 20%. So by technical definition, we're in a bear market. But I do get your point that many in Washington aren't acknowledging that we're in a recession, although we may very well already be in one. Second quarter GDP estimates expected to be negative. So then again, by the technical definition, 2 quarters of negative growth, we are in a recession. But to your point, many in Washington haven't quite come to terms with that or admitted that. But what is your outlook at large, especially as the Fed tightens more aggressively?
I wish I could quote you all of the time. Washington has said we're not in a recession when we were. They didn't even know it, that the recession had started. And likewise, central bank people. My outlook is that if we have peace, there's a lot of pessimism around right now, huge amounts of pessimism. Whenever there's a lot of pessimism, it often leads to a rally. If something happens in Ukraine, there'll be a big rally. Oil will go down, grains will go down, stocks and everything will go up for a while. I don't know what will cause the rally, but we're probably going to have a big rally. That rally is, I hope I'm smart enough to sell that rally, because that's probably the last big rally. It could be a very big rally, but that's probably the last time.
And that would or could be triggered by a resolution to the conflict in the war in Ukraine, is what you could see as the possible trigger for a rally.
The obvious for me would be if something happens in Ukraine. I have no idea. I don't have any inside information, but if something happens, that would cause a big rally.
But you're saying we're currently in a bear market, but not necessarily the one that you anticipate will be the worst in your lifetime.
When it's worst in my lifetime, you'll know it.
It's not now? We're not in the middle of it now?
No, this is not the worst bear market in my life. This is nothing. This is nothing. Oh my gosh. I have seen some astonishing bear markets, not just in the US, all over the world.
But you don't think that we're in the beginning of the worst bear market of your
If you
lifetime?
want to define it that way, yes. But if there were peace, we might make new highs. But still, that would not negate the bear market.
All right, so we're in a bear market. We could still see a rally on positive diplomatic developments out of Russia, Ukraine, but ultimately we're still owed another huge bear market worse than anything we've seen before, even if it's not this one, if I may recap.
How can it not be a horrible bear market? You know what the debt has happened? I mean, the U.S. has increased its debt by several times since 2009. Japan, oh my God, they can't even count the debt in Japan. Many countries in the world. The debt just goes higher and higher and higher. 2008 was because of too much debt. It's much worse now.
Well, it's apologies for the wobbly table here, Jim. It's much like the economy. It's wobbly like the economy. So you were correct that you said that this unprecedented fiscal and monetary stimulus was going to cause inflation. You said that in March of 2021 when you were on the show. Now we've hit 9.1%, a new high over the last 40 years. What is it going to take to tame this inflation?
To fix it? Well, no, they don't know how to fix it. The only thing, Michelle, in 1980, interest rates on Treasury bills, U.S. Treasury bills, were over 20%. That's not a typo. 20%. It cured inflation. It solved the problem finally. No, because we've made so many mistakes this time around. Interest rates will have to go very, very high. We will have a serious recession. Many people will go bankrupt. We're going to have a lot of problems. There's no other way to solve the problem.
Other than to have double-digit Volcker-esque type of interest rate hikes.
Well, we have a choice. We either raise interest rates a lot and have a lot of pain, or we let people continue to print money and have horrible, horrible inflation and cause even more pain. There's not many choices.
Well, we've had the likes of Art Laffer and Stephen Moore on the show, and they're saying that if you take a supply-side economic approach and you cut taxes, for example, that we could get out of the situation without a recession, or certainly not one as ugly as would need to be to tame interest rates by just increasing, to tame inflation by just increasing interest rates.
I am all for cutting taxes. It's always better for any country, any economy. The fewer taxes, the better. Fine, if Steve thinks they can pull that off, by all means. But if we cut taxes, we're going to have big push into the economy. But while these guys are printing money, it's just going to make inflation worse. I don't know how we solve the problem of too much inflation without pain.
Right. Well, and there is a call for even more stimulus by the Biden administration. Democrats wanting to get through a watered-down version of the Build Back Better plan. So that certainly is going to perhaps, or definitely pour more gasoline onto the fire there. So, Jim, what can an investor do in this environment?
Well, first of all, investors should only invest in what they themselves know a lot about. They shouldn't listen to hot tips on TV, even on Kitco News. That's a terrible way to invest. Stay with what you know. I can tell you some of the things I'm doing. When you have inflation, if you own the things that go up in price, you make money. I mean, agricultural goods are going to go higher before this is over. Energy will go higher before it's over. Everything will go higher before it's over. Real goods. If you own those kind of things, you will do well. If you know how to sell short, then you can sell short many things, many stocks, not just in America, all over the world, and make a lot of money. If you don't know how to do either of those, put your money in the bank and wait. It's better to earn 1% per year than to lose 20% per year And bear markets lead to big losses.
Can you stay in cash in such an inflationary environment?
Sure, the interest rates will go high enough. One thing about interest rates, in inflation, they will eventually go high enough to offset the effects of inflation.
Well, in terms of the outlook of the IMF, the International Monetary Fund, they think that inflation globally will likely be tamed by next year when rate hikes start to work. The IMF saying that global interest rates will keep rising until 2023, and then heated prices will begin to cool in response to actions from central banks. Do you agree?
I've been investing a long time. I have never known the IMF to be right about anything. I don't even bother. I mean, the best thing we could all do is abolish the IMF. We're not, because there are too many people who make money off the IMF. They've never been right about anything.
Abolish the IMF, huh?
Yeah, we'd be better off. That would be a way towards solving some of our problems. We abolish the IMF, the World Bank. Well, we'd be on the way.
Why do you think that would necessarily help solve some of the global economic problems?
Money we spend on the World Bank and the IMF every year, huge amounts of money. All those guys that are bureaucrats at work, they love working for the IMF. They get tax-free pensions, they get high salaries, they get all sorts of perks. They think it is heaven. You know who's paying for it?
Yeah.
Us.
Well, taxpayers in the US, global taxpayers. Just to play devil's advocate here, don't we need global bodies to coordinate things on the world stage?
It would be wonderful. If you can get a good one, do it. The IMF ain't it. You should go back and read some of the IMF's annual report, some of the things they have said, and you would be stunned at how many times they said, Southeast Asia is great. And then the next year there's a gigantic crisis in Southeast Asia. I could go on and on.
Well, I know the IMF has taken a very aggressive position against Bitcoin. Certainly no fan of Bitcoin. And you have in the past said that you would have bought Bitcoin at $1 or $5. That's a quote from an interview you had with the Economic Times of India. Bitcoin, not quite that low, but is on sale, 70% down from its all-time high. Would you buy Bitcoin now?
No. What I said was, I wish I had bought Bitcoin at $1 or $5. Michelle, I wish I'd bought IBM in 1914. I wish I'd done a lot of things. I wish I'd bought Amazon at $1. No, all I said was, I wish.
Okay. Well, you can't have it at $1 or $5 now. Well, hopefully not. Hopefully it doesn't drop to that level. But is there a level that you would buy Bitcoin at?
There's no level at which I would buy those cryptocurrencies unless something dramatic changes. No, the answer is no.
What would be something dramatic?
Well, I guess if suddenly the EU used the Bitcoin as its national global currency, then you would have to. Then it's no longer cryptocurrency. It's a computer currency backed by governments. Bitcoin is wonderful for people who buy it and sell it and trade it. I know people who are having fun trading it. Nothing wrong with that. But if it ever becomes successful as currency, which they say it will, no government's going to allow that. No government wants to lose its control. They all love their monopoly. They're not going to give up their monopoly. I wish they would, but they aren't.
All right, not a fan of Bitcoin, but you've always been a fan of agriculture. And last time you were on the show, you said that a good inflation hedge was the Rogers Agricultural Index. It did perform well. It did drop over the last month or so, still up about 2% year to date. Why are we seeing a sell-off in agriculture now?
Sure, nothing goes straight up or straight down. Things go up like this. There are always corrections along the way. Maybe there's something else going on, but in my experience, corrections are normal and common. They happen all the time.
So is investing in agriculture still a wise move if you're trying to hedge it against this current inflation?
My answer is yes, but my plan is if there's peace in Ukraine, agriculture is going to go down. All grain prices are going to go down for a while, and that's the time to buy.
What is the likelihood of peace in Ukraine over the next year or so, if you were to prognosticate how this plays out?
Well, I would say the chances are very good. It's a foolish war. All wars are foolish, but I mean, Mr. Putin's not getting anything out of it. The Ukrainians aren't getting anything out of it. I don't see that it's doing anybody any good. Mr. Putin may get what he wants, or at least part of what he wants, and then things would calm down. But listen, I don't have any inside information
But
on.
you're a man, a seasoned man of the world with insights across the globe, so always like to get your thoughts on things.
I would suspect that there will be some positive development in Ukraine in the next few weeks, yes, if not before.
Wow, in the next few weeks, and that would trigger a relief rally.
That would trigger a big drop in grains, a big drop in oil, which would cause a big relief rally in stocks, because everybody would say inflation's okay now, no more problems, hooray, buy stocks, buy bonds.
What do you think a diplomatic solution to this war could look like? Would that involve territorial concessions to Russia? Would it involve Ukraine declaring that it won't join NATO? What do you think that would look like?
Those questions are complicated because Ukraine, is not a real country. It's something that all of those guys were part of the Soviet Union before. And Stalin or somebody said, okay, these are the Ukraine and this is Russia, etc. Parts of what is now Ukraine were really parts of Russia before. And then somebody, when they were drunk or lost or confused, said, okay, you're in Ukraine now and this is Russia, etc. So if you're talking about territorial concessions, if the previous Russian parts of Ukraine went back to Russia, is that a territorial concession? That's what the Ukrainians would say. But is it in the big scheme of history? Probably not.
And that's obviously a matter of perspective, and a valid one at that. Would you say, though, that is how this conflict gets resolved, if you were to speculate?
Well, we certainly have to do something. As I said, it's a foolish war. It's costing a lot of people a lot of money. And lives, of course. So somebody's got to figure out whatever we have to do, let's solve this problem. And that may be a solution. I have no idea what it'll take. Maybe if we all drop billions of dollars into Ukraine, that would solve the problem. Something needs to be done.
In the meantime, we do have this war creating a stronger relationship between Russia and China. And it has led to a discussion of the potential bifurcation of the global monetary system, with perhaps some kind of commodity-backed central bank digital currency that is used by China, Russia, some of the BRIC countries. You have prognosticated about the ultimate collapse of the dollar as a sole global reserve currency. Has this war accelerated that?
Yes, unfortunately, the war has accelerated. The world's international medium of exchange is supposed to be neutral. You can do anybody can do anything with it they want to. But unfortunately, Washington is changing those rules. Washington says, well, if we don't like you, you cannot use the US dollar. And people say, wait a minute. An international medium of exchange is supposed to be neutral. That's not the way it's supposed to work. So for many reasons, many countries are now looking, even our allies are now looking for something to compete, because it could happen to them. All of a sudden Washington could say, you're finished. So for political reasons, it's accelerating the move to looking for a competitor to the dollar. And of course, the economic reason. We're the largest debtor nation in world history. I'm not the only person who knows that. The whole world knows that historically, big currencies, major top currencies change every 100 years or so. So for political and economic reasons, it's already in process. And this may make it worse, because Washington has said, we'll take your money away from you if we don't like you. Many people have had their assets seized by the US because they don't like them now.
So in the long run, the weaponizing of the dollar serves against the dollar in terms of maintaining its dominance. But in the short term, we have the dollar performing incredibly well, stronger than the euro at the moment. Why is that?
Well, I own a lot of US dollars, as we've discussed before. The reason I own them, not because it's a sound currency, it's a disaster going forward. But in times of turmoil, people look for a safe haven. And for historic reasons, many people think the dollar is a safe haven. It's not, but they think it is. So I own a lot of US dollars. US dollar is going to get overpriced, might even turn into a bubble, depending on how bad things get. But somewhere along the line, and getting sooner rather than later, and I don't like saying it because I'm an American, but more and more people are accelerating the search for something to compete with the dollar. I don't know if you know what it's going to be, don't announce it on the air because I'm looking for it every day. Maybe a commodity-backed SDR or something. I'm skeptical, but who knows what they might try.
What does a bubble in the dollar look like?
Oh, the dollar right now is at par with the euro. The euro could go to 70 cents. The euro could go down a lot against the dollar. That would be a big, big bubble in the US dollar.
All right, Jim, going back to safe havens, gold, as we know, is supposed to be a safe haven, particularly in times of economic turmoil and geopolitical tensions. We certainly have that. Now, granted, gold has performed better than other asset classes. It's holding its value better, down about 7% year to date compared to the S&P 500, as we've mentioned, down 20%, the NASDAQ down 30%. So gold holding its own compared to other assets. And it does have to contend with a very strong dollar. But do you think that gold should be doing better in this environment?
Well, again, it happens many times that when you have assets going down, nearly all assets go down. I mean, if you remember 2008, gold went down a lot at first. Then, of course, it hit bottom earlier and skyrocketed after that. It's another asset that we all like to buy or sell. I own a lot of gold, as you know. I'm not buying now. And if I will buy more silver soon, probably, or gold soon, probably. But no, in my view, and I'm a horrible market timer, but in my view, it's a normal correction in a time of despair, despite the time when people are worried about assets. And when they're worrying about assets, they throw everything out the window. And if people get margin calls, they have to sell anything they can to meet their margin calls.
So what is the level that you would consider buying gold?
That's a good question. I'll have to watch Kitco. No, the answer is the market will tell me. If I see hysteria in the market and panic and everybody's saying, get rid of my gold, that would probably make me want to buy gold again.
So not a price level that you're watching for?
No, it depends on what the market will tell me the price. I hope the market will tell me the price. I'll still get it wrong, but I hope the market will give me guidance.
You don't really have such a track record of getting things wrong, Jim. I mean, during your time of running the Quantum Fund, I believe that you were up 4,200%.
Who cares about the past? It's only the future we have to worry about now.
Past performance is no indication of future performance, as they
Certainly
say.
not in my case, no. You want to hear about my first wife?
Actually, sure. Let's hear about your first wife.
You know, I ran into her the other day by accident, and I am so glad. I'm so glad I'm no longer married to her. And at the time, I was unhappy. Boy, what a good luck that was.
All right, so what is the secret to happiness, then, do you think, in a marital relationship?
Oh,
Seeing as we've gone there.
The best thing we're going to become a marriage show?
Well, you know what? We may as well get some relationship advice from you, seeing as the conversation is...
We the Lonely Hearts Club, we can pair up people. No, obviously to find somebody with whom you're not just compatible, but the term is soulmate, somebody who can finish your sentences. If you say the sky is, and she says blue, but tomorrow it's going to rain. Somebody who you think together. It's rare, but it does happen.
Well, I'm very flattered that you decided to share some of your insights about love and life with us, although you have been open about that with me in the past. When we chatted several years ago, you told me that the best advice you could give me was to marry a farmer. I'm still working on that one, Jim.
Well, by all means, my point was that farmers are going to be very rich in the next couple of decades. And if you want to have a rich spouse, marry a farmer. I am more optimistic about the future of agriculture than most professions I know. But Michelle, maybe you know a rich farmer that I can marry, But the farmers are going to be rich.
Yeah, the Lonely Hearts Club that you mentioned, maybe we recruit some farmers to that.
Okay, we can have a Lonely Hearts Club farming.
I think there is a dating site called that for farmers only, actually. I believe one of those exists. Maybe I should check it out.
Maybe you should go and look.
All right, well, Jim, you've given a lot of advice over the years, including that nugget there. What would you say is the best piece of advice you've ever received?
Buy low and sell high. The problem is what's high and what's low. It's not easy. I've also, well, for many years I was very anti-children, extremely anti-children. Then finally had children. I would say that everybody watching this should have a child if they're old enough, because children are really, really a lot of fun and fabulous. That's one piece of advice. Another piece of advice is stay with what you know. Pursue your own passions, whatever they are. If you want to be a gardener, be a gardener. You'll be happy and successful doing what you want to do. And I see it all the time. People are not happy at what they're doing, or they're not completely passionate about what they're doing. And it's sad for me, because if the people in the world who are passionate about what they are usually successful, and if they're not, they don't care because they're happy. Right. You don't care if you're successful if you're happy.
Jim, pearls of wisdom ranging from life, love, and the markets. Really a pleasure chatting with you. Thank you so much.
One last thing,
Please.
Michelle. Watch Kitco News.
That's another great piece of advice. Thank you, Jim. Good to see you as always.
Thank you, thank you, thank you.
Kitco News coverage of FreedomFest is brought to you by Coin Payments, crypto payments made easy.